Hello and welcome back to the Deep Dive. This is the Tech Talk English podcast, and I'm really glad you could join us today. If you happen to be watching us over on YouTube, definitely take a second to hit that like button. Maybe share this deep dive if you know someone curious about, well, what we're talking about today. And of course, please subscribe. That way you won't miss out on any of our future explorations. Today, we are plunging headfirst into, let's face it, one of the most talked about topics out there, also maybe one of the most confusing, technology and finance-wise anyway, cryptocurrency. Maybe you've heard of Bitcoin, maybe Ethereum, seen headlines about NFTs, or just caught the word crypto floating around. Well, our goal here, our mission for this deep dive is to cut through all that jargon, the hype, and give you a clear, engaging, and hopefully really useful understanding of this transformative technology. And guiding us through this, well, often complex landscape, we have a fantastic expert in blockchain and digital assets. Welcome.
Thanks so much for having me. It's great to be here. I'm genuinely excited to unpack cryptocurrency because, it's so much more than just a buzzword. It's really changing how we think about fundamental things, money, value, even trust within our financial system. Think about it like a payment across borders. Used to take days, cost maybe 10% in fees. Now with crypto, potentially minutes. And for pennies. That's a huge shift, and it's already affecting millions. Just one example, really, of the implications.
That's a brilliant way to frame it. Sets the stage perfectly. And our mission today is exactly that. Pull out the key concepts, the opportunities, but also the risks, and the real-world uses so you, listening, walk away feeling genuinely informed. Okay, so for someone listening who's completely new to this, let's start right at square one. What exactly is cryptocurrency? What's the core idea that makes it click?
Great question. The most important place to start, really. At its heart, cryptocurrency is digital money. Simple enough, right? But there's a critical difference. Unlike, dollars or euros, your typical currencies, crypto doesn't depend on central banks or governments to issue it or manage how it moves around. No, instead, it's built on this really groundbreaking tech called blockchain. You think of blockchain like a public digital ledger. It's shared globally, constantly growing, this list of records, and it records every single transaction very securely. Plus, it's transparent, meaning basically anyone can look at it, and it's designed to be incredibly hard to tamper with. Once a transaction, a block, is added to that chain, changing it is, well, practically impossible.
Okay, that security and transparency part, that sounds really powerful, but I think for a lot of people, digital money still feels a bit abstract, almost like someone just made it up out of thin air. Can you help us get a handle on how the technology itself, the blockchain, gives it real legitimacy and value, beyond just being, internet money?
Yeah, you've hit a really crucial point there. It is the technology, not just the digital part, that gives crypto its unique strength. And legitimacy, too, I'd say. The fact that it's decentralized. That means no single company, no government controls it. Take Bitcoin. That was the first one, back in 2009. It came out with this pretty radical idea. Let people send money directly to each other, peer-to-peer. No need for a bank in the middle to approve or process it. It also cleverly solved this thing called the double spend problem, which was always the issue with digital cash before. How do you stop someone from just copying and pasting money? Well, blockchain ensures each, let's say, coin is unique and can only be spent once by its owner.
Okay, so the tech prevents the copying. Makes sense.
Exactly. And since Bitcoin, the whole ecosystem has just exploded. There are thousands of different cryptocurrencies now, and they have all sorts of different purposes. Some are still mainly for payments, like Bitcoin, but others, they're designed for things called smart contracts.
Smart contract.
Yeah, think of them as self-executing agreements. They're written in code right onto the blockchain. So when certain conditions are met, say a delivery is confirmed, the contract automatically triggers the payment, or whatever the agreed action is. No middleman needed to enforce it.
Interesting.
Then you've got digital art, collectibles, NFTs, non-fungible tokens. These are basically unique digital items. Art, music, even virtual land where your ownership is recorded immutably on a blockchain gives creators and collectors totally new ways to interact. And we're even seeing entirely new financial systems being built. People call it DeFi, decentralized finance. The goal there is often to replicate traditional banking services, lending, borrowing, trading, but without the actual banks, using blockchain and smart contracts instead.
Wow. Okay. So it really isn't just one thing. It's like a whole universe of different applications built on this core tech. That clarifies the breadth a lot. Now, shifting gears slightly, because this is where a lot of people first hear about crypto investing. The headlines are always full of these, well, sometimes wild stories, right? Fortunes made, fortunes lost. So why do so many people see it as this massive opportunity, even knowing how volatile it can be? What's the real draw?
Well, the allure is definitely strong, no question. And it's mainly because of that potential for really rapid, sometimes exponential growth in value. We've seen assets go from being worth practically nothing, pennies, to literally thousands, sometimes tens of thousands of dollars in relatively short spans. Those stories, they capture the imagination, especially for people looking for, high returns. Bitcoin itself is the classic example, isn't it? Worth since when it started trading. At its highest point, it broke $60,000 per coin.
Incredible numbers.
Absolutely.
Yeah.
And stories like that are powerful. Some early investors, yes, they made absolute fortunes, but, and this is the crucial, but that potential for huge gains comes directly hand in hand with equally huge risk, often extreme risk. We've also seen times where major cryptos have dropped, 70, 80% of their value in just a few months.
Ouch.
Yeah. And it's not always just normal market ups and downs.
Right.
It can be driven by, speculation, bubbles, sudden tech shifts, regulatory news. It's a really unique high-stakes environment, which is exactly why education, doing your own thorough research, and having a really solid grasp of risk management, these aren't just nice to have. They're absolutely critical if you're even thinking about getting involved.
That's a really vital point. It's not just risk, it's a different kind of risk profile almost. And speaking of risks, beyond just the price going up and down, which you've touched on, we also hear constantly about scams and hacks in the news all the time.
Yeah.
That can be really scary for newcomers.
Yeah.
So for our listeners, maybe they're curious but also cautious.
Yeah.
How can someone actually stay safe in this space? What are the practical steps?
Safety is absolutely key. You really can't overstate its importance. The very first step, the foundation really, is using a secure wallet to store your crypto. Think of a wallet like your digital bank account, but crucially, you are the bank. You're in charge of security. There are broadly two main types to know about: hot wallets and cold wallets.
Hot and cold. Okay.
Yeah. Hot wallets are online, connected to the internet. Makes them super convenient for quick transactions, day-to-day stuff. But that connection also means they're more vulnerable to online threats, hacking, phishing, malware, just like any online account, really.
Makes sense. More convenient, more exposed.
Exactly. Now, cold wallets, on the other hand, they're offline devices. Often look like a USB stick. They store your crypto keys completely disconnected from the internet. That makes them much, much more secure, especially if you're holding larger amounts or holding for the long term.
So less convenient for daily use, but safer for storage.
Precisely. It's that trade-off. You plug it in when you need it, unplug it when you don't. And here's the single most important piece of advice. The absolute non-negotiable warning. Never, ever, under any circumstances, share your private keys or your recovery phrases, sometimes called a seed phrase.
Never. Got it. Why is that so critical?
Because those keys, those phrases, they are your crypto. Essentially, they're the master key. Imagine giving someone the combination to your physical safe containing all your valuables. If someone gets hold of your private keys or recovery phrase, they control your crypto. They can send it anywhere. And unlike a bank, there's no fraud department to call, no government insurance to get it back. It's gone.
Wow. Okay. That's sobering. Keep them secret, keep them safe.
Absolutely. Write them down offline. Store them securely, maybe in multiple places. Don't store them digitally where they could be hacked. You are your own bank security guard.
That's incredibly vital advice. Really hammers home the responsibility aspect. So, okay, stepping back a bit, what does all this mean beyond just the investing side? Beyond the price charts and the stories of making or losing money? What are some...
Well, another really important use case is for people living in countries with, say, really high inflation or maybe general economic instability. They might use certain types of crypto called stable coins. These are designed to hold a steady value, often pegged to something like the US dollar. So using stable coins can help them protect their savings from being eroded by their local currency, losing value rapidly. It's like a digital safe haven in a way.
That's fascinating, using it to preserve wealth in tough economic times.
Exactly. And beyond individuals, we're seeing more and more businesses starting to accept crypto as payment for goods and services. They're integrating it into their checkout systems. They see it as a modern, maybe more efficient payment option to offer customers.
Right. I've seen pay with Bitcoin options popping up more.
Yeah, it's growing. And looking a bit more towards the future, but already happening now, developers are building what's called Web3 applications.
Web3, heard that term too. What's the idea there?
Think of it as potentially the next phase of the internet. The idea is a more decentralized, user-owned internet, where your digital identity, your online assets, maybe even your data are more under your control rather than controlled by the big tech platforms we use today. Imagine a social network where you own your posts and your connection graph, and you could maybe take it with you to another platform or even get paid directly if you choose to share your data. That's the kind of vision Web3 developers are working towards, often using crypto and blockchain as the foundation.
That paints a really different picture of the internet, much more user-centric. It's a powerful concept. So looking ahead then, given all these developments, the tech maturing, where do you actually see cryptocurrency going? What's the trajectory, say, over the next few years? How might it really weave into our lives?
Well, I honestly think we're still just at the beginning. Really early days in the grand scheme of things. The technology is evolving incredibly fast, and we're only starting to scratch the surface of its potential. One interesting trend is seeing governments themselves exploring digital currencies. They're called CBDCs, central bank digital currencies. Now, these are different from decentralized crypto like Bitcoin because they are controlled by central banks. But it shows that even traditional institutions recognize digital money is likely the future.
So even governments are getting in on the digital currency idea.
They are, exploring it seriously. But beyond just currency, the underlying technology, blockchain itself, is spreading its wings, so to speak. We're seeing it being implemented in supply chains. Imagine being able to track a product, say your coffee beans, right from the farm to your cup with complete transparency. Blockchain can enable that. In healthcare, people are looking at it for secure, patient-controlled medical records, giving you more power over your own health data. And it's massively shaking up the gaming industry, allowing players to truly own their in-game items as NFTs and potentially trade them or use them across different games.
So the impact is way broader than just finance.
Way broader. My personal take, I believe that within the next, say, 5 to 10 years, crypto, or at least the core ideas of decentralized digital value and blockchain tech, will become as common and integrated into our daily lives as the internet is today. It'll just be part of the background infrastructure for a lot of things. We probably won't even think about the fact we're using blockchain, much like we don't think about, TCP/IP protocols when we browse a website now. It'll just work.
That is a truly powerful prediction. Integrated, almost invisible, really makes you think. Okay, so for you, listening right now, maybe you're feeling intrigued, maybe still a bit overwhelmed by it all, which is totally understandable. What's the best way, the safest, most responsible way to maybe start learning more, or even perhaps dipping a toe into crypto, say with a very small investment? What's your advice?
Right. The absolute best way to start, and I really can't stress this enough, is education. Start there. Begin by following trusted, reliable sources. Deep dives like this one, reputable financial news sites that cover tech, maybe some academic papers if you're inclined. Focus on learning the fundamentals first. What is blockchain really? How does decentralization work? What's cryptography's role? Understand the different types of crypto assets before you even think about putting any money in. Knowledge is genuinely your best shield against risk and against just getting caught up in hype.
Education first. Makes perfect sense.
Then, if you decide you want to move from learning to actually investing, please be incredibly cautious. Start small. Really small. Never, ever invest money that you cannot afford to lose completely. I mean that literally. Treat it as gone the moment you invest it, psychologically. This is not a guaranteed path to riches. It's a highly volatile, still emerging market. And critically, try to focus on long-term learning. Understand the technology, its potential use cases, the projects you might invest in. Don't chase short-term quick profits. That's usually a recipe for disaster in any market, but especially here. Think of it more like investing in a potential future technology, a new frontier, rather than just betting on a price going up tomorrow.
That's brilliant advice. Education first, start small, afford to lose it, think long-term, understand the tech. Excellent takeaways. Well, thank you so much. This has been incredibly insightful. You've really helped us demystify a complex topic today for our listeners. Really appreciate you sharing your expertise.
It was my absolute pleasure. I truly hope this discussion helped everyone listening see cryptocurrency not just as, market noise or confusing tech jargon, but maybe as a genuinely powerful innovation that really is shaping our financial and digital future in some pretty profound ways.
Absolutely. And just to leave you, our listener, with one final thought to chew on, something building on what we've discussed, consider for a moment how many parts of your daily life already run on digital ledgers that you never see. Think bank accounts, loyalty points, databases tracking almost everything. Now imagine how a transparent, decentralized ledger like blockchain could fundamentally change the game for trust and transactions. What systems, what industries, maybe even what parts of your own digital life could be transformed if that control, that transparency was shifted more towards you. What might that unlock next? Definitely something to think about. We'll catch you on the next deep dive.